All right. Welcome back to the Roadmap to Retirement podcast. I'm excited to be joined by Jim.
Welcome to Roadmap to Retirement. Tune in for financial tips, investment strategies, and smart money moves to supercharge your retirement savings. Alex Neri, CFP, and guests are here to help you build your roadmap to retirement.
I'm going to say your last name correctly. It is Pashalidis. Is that correct?
If you have a disease, yes. No, it's actually Pashalidis.
Oh,
That's okay. No, Pashalidis is fine. Pashalidis is fine. I've been called way worse. Don't worry.
Okay. Sometimes those Greek names are tough, but
Yes.
appreciate you coming on. We're here to talk about all things Medicare. So I'm going to let you do your own intro, talking about what you do a little bit. But I did want to, encourage you to take a minute to tell your story, because I think it's a cool one on how you got into doing what you are today. So go ahead and share that with our listeners.
All right, well, I appreciate it. And so I'm not shy to share this story because actually I think the story might even be as valuable as what we're going to hear about Medicare, because I learned a lot about myself, which has helped me in what I'm doing today. So I was a teacher for 20 years in the city school district of Rochester and loved it. It was my purpose. Felt great for most of the time. But then as towards the end, it was lots of challenges. A lot of people, you see the news and I don't have to go too deep into it, but in my nearing the end of that 20 years, my parents ended up getting divorced. And so the reason I share that story is because at the divorce, my mother, like in many households, the female, my mom in this case, did everything. My dad really didn't do much, especially traditional Greek family. She did all the insurances and all that stuff. So all of a sudden, she's not going to help my father with it. My brother and I now, who are in the States, and my sisters in Canada, have to figure out my father's insurance. And this thing called Medicare all of a sudden comes in my face. And I was like, what is this? I have a master's degree. I can't understand what the heck they're talking about. It was anxious moments, right? So then I called a buddy of mine who had been doing it for a few years, and he helped us out. And I'm telling you, man, when he helped as the son of the person who needs the help, it took burden off my shoulders, right? And my brothers. And so we were very grateful. But as the person who's struggling with their own job, right? I'm watching what my friend did, and he didn't charge us anything. But if I had to put a price tag on it, I would have paid him quite a bit of money for what he did because of what it took off our shoulders. So I was like, hey, can you tell me a little bit more about what you do? So he did. I was like, okay, maybe tell me some more. And then I ended up getting my licenses, and I left teaching and have been doing this full time for 2 years. And so I still see it as I'm a teacher, first and foremost. There are a lot of people in this space, Medicare, that are very confused. And I also tell you this, that no matter if you do this full time, it's a constantly changing environment. And we'll talk more about that, what's going on for 2025. But that's in a nutshell what the transition was. But I guess the message I would say to people is, it's not too late to figure out find your passion, find what you're purposeful at, and it's not too late, and you won't regret it. I'll tell you that.
Yeah, that's an awesome story. And I really was excited to have you share it. And I think first of all, changing careers to do something you're passionate about is something that I'm always an advocate for. So I think that's great. And then also, I think our vision aligns a lot in everything that I try to do with this podcast, some of the other content that we use. I teach part-time at St. John Fisher. It's putting the education first. I think there's a lot of people that want to tell you what to do with your money. They want to tell you what insurance to go with. But I think if we can all as professionals put more emphasis on financial literacy, education, it's going to put us in a better spot long-term as a society, which might sound a little bit dramatic, but I think that there's a big void in our society right now for financial education around investments, insurance, everything else goes into it. And I think that's really what drew me to having this conversation with you today, is that we're aligned in that vision, which I think is really neat. Keeping education at the forefront here, let's pretend that I'm an alien, came down to earth. I've never heard of Medicare before, and a lot of people are probably in this situation. How would you explain Medicare to somebody that really just doesn't know anything?
If you're an alien, I would say go back.
They're among us already.
And before I answer it, not to make this like a presidential debate where I go back to the different question, but yeah, you being the teacher aspect here, the passion, all that stuff really is, if you're driven by anything other than that, you really should not do this, in my opinion. There's so many bad actors, and probably in your industry as well, where if you tell someone hey, what do you do for a living? The last thing you really want to say is, I'm an insurance guy, right? That's not something that rolls off your tongue. You're like, hey, my mom raised me to be an insurance guy. I got my insurance. But again, the way I've been introduced to this and all the way what I do for people, it does not match what I thought an insurance guy was, right? And even what you said about yourself as a financial advisor and planner, that's not the generalization that pops in my mind when I think of a financial advisor.
Thank you. I'll call that a compliment, but it's true.
That,
This is
that
not,
is a compliment.
neither of us are in a profession that you thought you were going to be in when you were like 17 years old. Maybe it seems like there's people now that set out to be financial advisors, but I didn't know what a financial advisor did when I was 17. And you stumble into this career and you find it as a way to help and educate people, and then ultimately hopefully have a passion for it and it keeps you driving forward. But I've had that conversation with so many people in similar industries that never thought they'd be doing this, and they stumble into it, and here we are.
Yeah, absolutely. Okay, so going back to the aliens, Medicare. All right, so here, a quick unknown or misunderstanding. Many people think Medicare is simply for those who are 65 and older. So let's pause that for a second. There are people that are auto enrolled in Medicare prior to 65 as well. Disability being a major one. There's other automatics based on certain health conditions, and you can look all this up. And I will be referring to this several times. If you go to Medicare.gov, a lot of the basic rules are there. That's provided by the government. So in this case, it's pretty thorough, pretty accurate. So Medicare, let's go through the traditional side. So if it's disability, after 2 years of receiving Social Security disability income, someone is automatically enrolled by the government into original Medicare. And what does that mean? We'll pause that for a second. Original Medicare is parts A and B. Hold on to that. So at turning 65, so a different scenario, different individual, they know it's coming. They may not know all the things they're supposed to do, but they now have to, in essence and in short, go from what they're used to, employer coverage or New York State of Health marketplace insurance, where they're used to paying a premium of some kind, most likely, and a co-payment. And now they're going to transition to this thing called Medicare. So Medicare is a government program, but it's provided by private insurance companies that choose to come into that arena. And there's rules that must be followed. And there's lots of that answers fully. It's something, but that's Medicare.
Okay, I think that clears up for the aliens. They're very excited. Once they're done building the pyramids, they're going to learn a lot about Medicare, and that's going to be awesome. Now, I don't want to go into too much detail on this, because I think we can't cover everything in this podcast. We're aiming for 20 to 30 minutes or so. We know there's different sections of Medicare. There's A, B, C, and D. What is the 15-second version of what people should know about those sections?
Oh, sure. 15 seconds. Okay. By the way, I do 101s. I do Medicare 101s at people's businesses and all that. Yeah. 20 minutes on this, by the way. So, okay.
Seconds would be great, though.
Yeah. A, B, C, D. And I taught third graders, so this is how it goes. Part A, hospital coverage. Part B, medical. Part C is what is known as advantage plans. And part D, as in dog, is for drug coverage. Okay. A, B, C, D.
Done. 15 seconds. Yeah, I think you nailed it. So, all right, let's take it a step further. So people that are approaching retirement start to be aware that there's a premium for Medicare, which is interesting because I've done this before. And for example, when I teach at Fisher, I've got a room of 21-year-olds, and they probably heard of Medicare, and maybe they know somebody that's on it. Maybe their grandparents are on it. And if I said, is Medicare free? Most of them would raise their hand and say, yes, Medicare is free. I know that I'm paying a tax or something out of my paycheck that goes to Medicare. And the impression is that when they retire, it's just going to be there. However, if I survey a room full of 60-year-olds who are not at Medicare age yet, now they're suddenly aware that there is a premium associated with Medicare. So to connect that back to A, B, C, and D, what is the premium for?
Let's talk about the categories.
Okay.
Part A, if you've worked for 10 years and paid into this system, Part A, hospital coverage, it'll be called premium free. Okay. So the word most is going to be a tough one to use here, but most people I see, that's the category they fall in. Okay. But there are people obviously who have not worked 10 years, and now there's a premium associated Part A, and that's again all tabled, all on Medicare.gov. Part B is the standard. This is the one where most people are experiencing the premium. Part B's standard premium in the year 2024 is $174.70 a month. Okay, now this scares and surprises a lot of people. Now, there are different, that by itself, I remember I said the word standard. So there are people that pay more on a category that we might be talking about later because of, believe it or not, you get rewarded if you make certain excess income. Your reward is you get to pay a little more for that Part B premium. Yay,
We'll definitely
congratulations.
come back to that.
Yeah, so that's, and we'll talk about that. There's also a possibility that someone's so low in income that they may have something called Medicaid, which is often confused between Medicare, and Medicaid is with the state, and it's with income limits are associated to it. So if you have a very low income, that Medicaid, your state, may have a program called the Medicare Savings Program that pays that Part B premium for you. So to you, it seems like it's premium free, but someone's paying for it. It just doesn't happen to be you. So then you might receive that income back into your Social Security check, which again, we can talk about later, how you pay for these things. So, and that is, by the way, typically how a Part B premium is paid. It gets deducted right from someone's, if they're receiving Social Security benefits, it's going to be deducted right away. They'll see a net number is what they receive. Some people don't even realize it's been taken out. Check that one out. Right? That's
okay. Perfect. And so we're tying this Medicare premium. We'll talk about the enrollment tables in a minute. We're tying the Medicare premium to Part B. And a question that we get all the time for our clients is they're turning 65. They need to go on Medicare. They understand that, but maybe they're still working. And your former career is a good example of this. If you're a public school employee and you're still working after the age of 65, you have great insurance through your employer. So people want to know, can I stick with my employer insurance, or do I need to pay this Medicare Part B premium, which for them is actually more than they're used to paying? I know the answer, but I want to hear your answer anyway. Do they need to go on Medicare if they still have insurance through their employer?
And the answer to that is, it depends.
Yes.
So there's a word, and if someone doesn't do anything else from this podcast, if they made it this far, write this word down: creditable. The word credit, creditable, creditable. That is something that has to be shown that what you have meets at least the threshold of what Medicare coverage would be if you were to leave. If the answer is yes, your coverage does that, then you can pause, delay is another word we use, your enrollment into Medicare. So how do you determine that? There are rules. But this is what I tell everybody, because I can tell you it's 20 employees or more is typical, but I still say the onus is on your HR department. You are your own best advocate, you as the individual who's turning 65, because they're not paying your penalties if they accrue. So I would go to my HR department before I turn 65, maybe by the age of 63 even, and they should be doing onboarding 101s, which by the way, I do. So you can
shameless plug. We'll also do that.
Yeah, exactly. But ask them for that. Is it credible? That way, if they say yes, all right, I don't have the same pressure as my friend who's turning 65, but no credible coverage, right? I can make a choice and I can do the shopping and compare costs and then say which one's more beneficial for me and my family.
Perfect. So short answer is it depends. Talk to a professional if you're not sure, but there's a good chance that you can stay in your employer plan for a while and save a little bit of money on the premium there, which is always good.
Yes, you can delay, and then it's totally up to you when you do it.
Cool. So one of the things with this episode that I want to be careful of is I think if we're doing an episode of Medicare, we can pigeonhole ourselves to this is only applicable to people that are 65 years of age or older. So what I'd like to do is keep the focus of this episode still on things that are applicable to everybody. So what are some things that even if you're not at Medicare age, you can be thinking about in a planning perspective? What should you know ahead of your 65th birthday so that when you do get to Medicare age, you're in the best possible spot?
I've hinted at this, and I've only learned this as a practicing professional. I didn't know this from when I had my meeting with my father. He's a very low income. This never pertained, but what I would do is 60, as I'm approaching, I would even do it at 60 years old. I'd probably start meeting someone like you, because I'm not a financial advisor. The financial advisor and planner can help you do a full holistic view. And then you might make some decisions. You might be on the borderline of one of those IRMA tables that we're going to talk about. And perhaps if you do some creative movements, you may no longer be if you did it 2 years in advance, if that makes sense. That's what I would do.
Okay, perfect. And to fill in the background on that from the financial advisor perspective, what we're talking about doing, is putting ourselves in a spot where we're not going to have excess income that we don't actually need, because this is probably a good time to bring it up. We'll come back to it in a second. Extra income is going to make your premium increase based on the IRMA tables, which again, I'll explain in a second here. So the strategies that we can use, whether it's Roth conversions, taking distributions earlier. And one of the big questions that we get that goes back to the IRMA stuff is what happens when I get to my RMD age? When I start to have my required minimum distributions, the IRS is making me take money out of my pre-tax accounts, my 401k, my IRA, whatever it is. And if you do the math on that and you project out a few years, you're taking a pretty big lump sum distribution each year that's going to push you up into a higher bracket in the IRMA table, which is going to be my segue to talk about IRMA, because we've hinted at it like 10 times so far. Right. So the IRMA table is the income related monthly adjusted amount. So this is a fancy way of charging you more money. It's not a tax, it's a surcharge on the extra income that you have. So this is the only type of insurance that I'm aware of where your premium actually goes up based on the income that you have. So if you look at life insurance, the premium is based on how healthy you are. You look at your car insurance, it's based on your driving record, your age, some other things. But Medicare is based on how much income you have. So fill in the blanks there. What did I leave out of IRMA?
No, you're right. You want to look at the table. You want to see where you fall, especially if you're barely over one of those increased amounts. You can do some creative adjustments earlier so that you can avoid it.
Yeah, we call that the IRMA cliff. So that's the way that it works is if you go 1 penny over that next bracket, right, you could be adding $100 extra to your monthly premium. And that is for you and your spouse. So if you're married, you have to consider your household income. And you can easily be adding thousands of dollars of extra surcharges a year by taking income that maybe you didn't even need it. Maybe you're just in the routine of taking out X amount of dollars per month, and then you get to the end of the year and you file your taxes and you realize you went $1 over the limit, and now you got to pay this extra surcharge for a year. With that, Jim, you already mentioned, they look at your income from 2 years ago. So this is why it's important to do proper tax planning and Medicare planning. Really you should start earlier than this, but at the very latest, be aware of it when you're 63, because that's the income they're going to base this on when you turn 65. I'm sure you have some horror stories of people that found out the hard way.
I have people that wait till the month they turn 65, and we are chasing so many things, and they're panicking more than anything. And what I try to remind them is, look, we're going to get through this. And you do have, by the way, IEP. Your initial chance to get Medicare in the standard way when you turn 65 is you have a 7-month. It's your birthday month is in the middle, 3 months before, 3 months after. So if you do reach to someone like me who can help on your birthday month, there is a path. It's just that you're going to feel a lot more anxiety than you need. Remind me again, the question was about the horror stories.
We don't need all the details, but I'm sure you have a couple examples.
No, there are. I won't even share individual people's stories, but just avoid it. And I just want to go back to, I would say 60 years old is probably at the latest, because we haven't even talked about Social Security, because Social Security, sometimes people think Social Security and Medicare are the exact same thing. They're not. They work together in some ways, but they're not the same. And you want to make those decisions on when do I claim my benefits for Social Security, and that might be well before you turn 65. So that's, again, they go together. That's why I want to mention that. So 60 years old, if you're not seeing a financial planner, I would definitely change that. Go see someone.
I agree. You should see a financial planner for sure.
Anyone available?
I don't know. We'll find somebody. But the one thing that we see a lot with this, so we're in the Rochester market. It's a fairly low cost of living. And you picture your average 65-year-old couple or individual. And a lot of people hear this, or they see the IRMA table and they're like, well, that's never going to be me. I don't have that much income, or I don't need that much to live on. Where we see this come into play for a lot of retirees is they have a one-time situation. It might be that they want to pay their house off because of conventional wisdom is don't have a mortgage in retirement. Maybe they're buying a cottage or some land for hunting. Maybe they're buying a second home. Maybe they're paying for their child's wedding. And they have this one-time expense in one tax year where they dip into their 401k or their IRA and they pull out an extra $100,000 to go do that thing, or maybe even more. And now they have that one situation that's pushing their income up into a higher federal tax bracket, federal state tax bracket, but also into this higher IRMA table. So it's not, I don't want people to hear this conversation and just disregard it as something that's never going to affect me. It can be that one-time planning thing. And for me as a financial advisor, by the time you're telling me that you just pulled all this money out of your 401k, it's too late to really fix it. There's a couple little tricks we can do maybe, but this is where the proper planning comes into place, and having a conversation with your advisor, whoever you're working with, say, hey, my daughter's getting married next year. I'm going to need an extra $30,000 for that. or hey, I'm going to buy a house or a cottage somewhere and that's going to cost me $250,000. Like that's important to know ahead of time. So had that conversation.
Yep, I agree.
Definitely.
Someone who's a good relationship with their planner, nothing goes by without them talking to them first. If they really have a
Yes.
very good relation, honestly.
Couldn't agree more. So I think we did a pretty good job of covering the IRMA part. We covered what all the different parts of Medicare are. The other thing that I want to make sure we cover today is just any changes or things that people need to be aware of, whether it's just a New York State thing or a broader Medicare thing. What are the challenges and opportunities that are presenting themselves this year and next year?
This year, and remember, I hit my 2-year anniversary of doing this full time. So that doesn't make me the biggest, oh my God, I got these war stories from 20 years ago. I don't have that. But in the 2 years, and from everyone who's been doing this for a lot longer than myself, this is expected to be a huge year of anxiousness, activity. What's happened now is the government actually has done some changes that are in the favor of the beneficiary of the Medicare recipient. So more of the onus will be on the carriers, the insurance companies, to pay a lot of different categories. The big one is the drug coverage. That's the one that people have been nightmare stories about, something called the donut hole. I don't know if you've ever heard that phrase, but where your cost is in one part of the year, there might be this, then they drop, and then they go shooting up. People have been used to that for the last few years. Well, that's going away. So it gives a lower threshold of what the client is responsible for. Guess what happens to insurance companies now? They have to pivot. They have to do something. So what that can mean, and we're waiting for all the final first looks, because starting October 1st is when we can start talking to people about 2025 plans. Some carriers, some will not continue in this market, potentially. Some might cancel plans. So you might have a plan that no longer exists. What are you going to do? What do you mean? I've had this my whole time. I'm 80 years old. I've been on the same plan for X amount of years. So we expect a lot of turbulence. With turbulence means a lot of opportunity for us to help more people, but they just need to know where to go for the help. That's going to be the challenge, because there's going to be a lot of predators out there in the market as well, because you may know in this industry, and perhaps even in yours, there's people that do some unscrupulous things. So they go and do not answer the phone. If I could give one piece of advice, don't answer the phone if you don't recognize the number. I would just say that.
I was shopping for health insurance a couple years ago, and I made the mistake of entering my phone number and something that I thought was credible and real. And I still might get calls from this, but it was like the month after that, I was getting no short of 20 phone calls a day from random numbers that were trying to sell me something. I don't know if it was legit health insurance and they just wanted to be the broker on it, or if it was a scam, but
Alex, I deal with a lot of vulnerable individuals, and it hurts. I feel pain. I've heard lots of stories in this category that make you would not even believe some of them. But if I can take that away and just block and protect someone from any of that, I would do that in a heartbeat. Even if it doesn't make me one panic. I'd rather someone just breathe, relax, and know that they can sort through this with the right guidance. That's all I'd want to know.
Appreciate that. On that note, if people do want to learn more about Medicare, or they want to see their own specific situation with expert eyes on it, how do they get a hold of you, and what's the best first step?
Yeah, I mean, to reach out to Jim Pashalidis, I'm a part of an agency called Empower, and literally I like it on punny, but that's our goal, is to help educate someone so they're empowered to make an informed decision. That's really what we do. So to call, I have a phone number, I have a cell phone, I have a website, I have lots of ways people can do it. We can add that to the script in the podcast. But yeah, any way they want. And what we do is we make it accessible for everyone. So some people cannot leave their homes. We will go do home visits. We have done them in neutral setting, because some people don't like office settings, whatever. We're flexible. I've done Zoom calls. I help people throughout the country in different states all the time as well. So it's possible. However, someone can access the information, and we always start with educating them on what their situation revolves around. And everyone's individual. The same answer is not true for your own. You could be living with your spouse. You may have two different plans because of your needs.
Perfect. All right. Thank you for being here. This has been the Roadmap to Retirement podcast. Jim, thanks so much for joining. I hope everyone found this helpful, and we'll cut it off there.
Thanks very much, Alex.
All right. Thank you.
Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Alexander Neri. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Alexander Neri or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor. Alexander Neri and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.